Hi everyone, and welcome to Insider Financial Talk Stocks. My name is Alex Carlson. I will be your host today. I'm the editor-in-chief of InsiderFinancial.com, and in this video we will recap today's market action and discuss our game plan for tomorrow. But first up, to get our market moving reports on top small caps, click that link in the description or go to signup.insiderfinancial.com or sign up with your email on any of the pop-ups on insiderfinancial.com. After you sign up with your email, you can then sign up with your mobile number. Mobile is the fastest way to get all of our reports, and it works for all numbers worldwide. Simply enter your country code first, followed by your number. For US and Canada, it'll be 1 plus area code and number. Never begin the format with 0. It will not work. And after you sign up, you will get a welcome email, which includes a free copy of the Insider Financial Guide to Penny Stocks ebook. Our ebook, our email service, and our text messaging service are all free services from InsiderFinancial.com. We do not run any paid subscription service whatsoever, no Discord rooms or Telegram chat groups. Well, guys, in the markets right now, it's all about low floats. GDC was up 45% today on a 960,000 share float. MICS was up 41% on a 980,000 share float. And guys, you got to trade these pop and then they come down. These are like gimmies. Low floats are gimme plays. And speaking of low floaters, we have a new low float for our subscribers tomorrow. This fintech play has a 2.43 million share float and just a $9 million market cap. Insiders own 31% of the company, and the stock trades at just 2 times earnings. To get our full report, click that link in the description or go to signup.insiderfinancial.com or sign up on any of the pop-ups on insiderfinancial.com, where we are expecting major fireworks in this name tomorrow. And in terms of the overall market, the Nasdaq continues to outperform the Dow and the S&P 500. Overall, investors remain cautious as talks on the debt ceiling resumed, headlined by U.S. President Joe Biden and House Speaker Kevin McCarthy. Meanwhile, retail sales rose less than expected in April, pointing towards consumer spending pullback. We also today had commentary from Fed Reserve speakers. Here's the 15-minute chart on SPY, and you can see we are completely range bound on the SPY, whereas QQQ has been trending higher. We're up here near the top of the range. So that is why QQQ has been outperforming the SPY. But today we had earnings from Home Depot. Investors are worried about a recession after this earnings report. It continues to be in the back of everyone's mind. We have the debt ceiling worries, we have inflation concerns, Fed interest rate hikes, and upcoming possible recession. Home Depot reported a mixed Q1 earnings report today. Comparable sales fell 4.6% during the quarter to miss the consensus expectation for a drop of 2.1%. Home Depot execs pointed to extreme weather in California that disproportionately impacted results and lumber deflation as negative factors during the quarter. Broad-based pressure across the business impacted results was also observed. Average ticket rose 0.2% year over year during the quarter to $91.92, and sales per retail square foot fell 4.7% to $592.94. Operating income was down 6.4% during Q1 to $5.55 billion. Net earnings fell 8.5% to $3.87 billion. EPS came in at $3.82 versus $4.11 a year ago and $3.79 consensus. Looking ahead, the home improvement retailer sees full-year comparable sales down 2% to 5% and EPS down 7% to 13% versus prior expectation of a down to at a mid-single-digit rate. Home Depot warned on uncertainty with consumer demand in setting its forecast. Looking ahead, the store chain forecast a decline. Again, just reiterated that. So overall, bad news affected Lowe's. The overall, Home Depot is about home improvement, sign of construction demand, and in terms of the overall housing sector. So this is a a leading indicator that things are not looking good in the housing and that we could see a possible recession later this year. So again, that is weighing on the markets. In terms of tech, we also saw C Limited, SE. They missed earnings today. I know a lot of traders want to buy dips, but that has been a losing strategy after bad earnings reports. Look at PayPal, PYPL, and Disney both have been disappointing. PayPal, look at this. I mean, missed earnings here. You had the gap down from 75 down to 70. I know a lot of people are trying to buy the dips, and here we are at $60. This is just an absolutely taken to the woodshed and gotten killed. Disney, another one. I like Disney long term, trading here at $90, but it's just concerns over streaming numbers. Very competitive in the streaming space between Netflix, Disney. You have HBO Max. Overall, it's a tough sector right now. And then if there is a upcoming recession that everyone is talking about, you're going to get less people going to Disney theme parks. So there's a lot of overhang in the markets right now. A lot of concerns. But there are some positives that we are looking at tomorrow. First up is EPOW. Earnings came in after the bell. The company announced financial results for fiscal year 2022, featuring 415% revenue growth to a new record. Chairman said, "I am immensely proud to announce our financial results. Our revenue growth of 415% from fiscal year 2021 bears testament to the remarkable efforts of our dedicated team. We have quickly emerged as a leading manufacturer of graphite anode, earning the trust and business of the top 3 lithium battery manufacturers and the world's biggest EV manufacturer by volume, BYD. Our commitment to quality and service has positioned us as a trusted partner of our customers in the lithium battery market." So again, lithium is a hot sector. EVs, batteries. I like the lithium battery plays better than the overall EV plays. We've seen a lot of weakness in the sector. You know, Mullen has been absolutely taken to the woodshed. And I think there's a lot more opportunities when it comes to lithium in general, and also the lithium battery sectors. He says here, as we look ahead to 2023, our focus is on ramping up our manufacturing capacity to fulfill our customers' orders efficiently and effectively. I believe strongly in the potential of our company. I consider our stock to be deeply undervalued given our current position and prospects. As a testament to my confidence, I plan to continue purchasing shares in the open market. We have laid a strong foundation for growth, and I'm excited about what we can achieve in the years ahead. So very positive comments by the chairman. Insiders own 53% of the company, trading here at $1.93, just an 11 million share float, $48 million market cap. There's a lot to like about EPOW, and we got a 52-week range of $1.37 to $6.42. So I think this one can go a lot higher. Next up is XFOR. We got positive phase 3 results after the bell. The company announced positive phase 3 results showing their drug reduced the rate, severity, and duration of infections versus placebo in participants diagnosed with WHIM syndrome. 60% reduction in annualized infection rate versus placebo, greater than 75% reduction in percentage of individuals experiencing severe infections, that's a grade 3 or higher, in the group versus placebo, and a greater than 70% reduction in mean total days with infections versus placebo. The company is on track to submit an NDA early second half of 2023 following completion of pre-NDA meeting with the FDA. So a lot to be excited about with this company. Certainly be watching for some price action here. Breaking through trend line resistance here. A lot more room this one can run. We got a 52-week range of 65 cents to 241. Hopefully on this news we can test new highs. So certainly be watching this one tomorrow and the remainder of the week. Next up is TRKA. We had a red candle day, but trading above trend line support here. Nice little breakout here. Let's see if we can get continuation tomorrow. We'll be watching tomorrow for further trade setups. Had good earnings. The company reported revenue of $59 million, adjusted EBITDA of $1.5 million for the 3 months ended March 31st. The company here is describes itself, where is it here? Describes itself as a professional, it creates brands and experiences and connects consumers through emerging technology products and ecosystems to deliver performance-based measurable business outcomes. So again, 5th consecutive record revenue quarter based on quarter-over-quarter revenue of increase of 276% over the comparative prior year period. Gross profit of $8.8 million and adjusted EBITDA of approximately $1.5 million. Strong revenue growth in performance solutions within home services and professional services sector. So again, this one here spiked to $1 back in March. Big correction, came down here, found the support, making another curling up here. Let's see if we can test 30 cents this week, get above there. We're going to run into some moving average resistance there. But again, this one can really make a move, and we're also trading above the 152-day moving average of 22.5. So again, that is positive. Let's see this one can keep the momentum going. Next up is ATLX. This is one I have talked about a lot this year. It has just been an absolute great performer, up 239% so far this year. I will continue to be talking about this one. As I said, it's one of the best lithium plays out there, and it is a great trader. I mean, this one ran all the way double top here at 45, perfect double top, corrected all the way down to 15, ran to 30. I mean, this is just a great swing trade play. The company just put out a press release today, but if you look at what this company is, it's focused on advancing and developing its 100% owned hard rock lithium projects, which consist of 64 mineral rights spread over approximately 75,000 acres, located primarily in the Lithium Valley area of the state of Minas Gerais in Brazil. In total, Atlas Lithium has 100% ownership of mineral rights for almost all battery metals, including lithium, nickel, rare earths, titanium, and graphite, in addition to mining concessions for gold, diamonds, and sand. The company also owns approximately 45% of Apollo Resources Corp, private company, and approximately 28% of Jupiter Gold Corp, JUPGF, on the OTC. So this one here has a lot of assets, great trader, just a 4.25 million share float. And this one here is going to continue to be provide great trade setups and great opportunities for traders as this year progresses. So if it's not already on your radar screen, please put it on your radar screen. But here at InsiderFinancial.com, our focus for the rest of the week is the report we have on a fintech low float penny stock on the Nasdaq. The only way to get our report is to click that link in the description, go to signup.insiderfinancial.com, or sign up on any of the pop-ups on insiderfinancial.com. No spam, your info is never shared, unsubscribe anytime. You can even sign up just to see the level of research we do here at insiderfinancial.com, and unsubscribe if you want a clean email box. Finally, guys, Insider Financial and I are not investment advisors. This video does not provide investment advice. Always do your research, make your own investment decisions, or consult with your nearest financial advisor. This video is not a solicitation or recommendation to buy, sell, or hold securities. This video is our opinions meant for informational and educational purposes only and does not provide investment advice. Past performance is not indicative of future performance. Thanks for watching. Remember to smash that like button and hit the notification bell to be notified when a new video is uploaded. Good luck, guys, tomorrow. Bye-bye.